Hey guys, how are you? Happy Wednesday. Wonderful day. Please give me some okay that you can hear me and that you can see my screen. Why don't I see anything here? Where is that? All right. Guys, give me please some okay that you can hear me, that you can see the screen. Drop me some Y or yes or okay in the chat, please. Okay. Just 1 second. Yep. All right. Perfect. Here we go. Wonderful. So once again, happy Wednesday. Big day today. The FOMC, the cash rate decision is coming in US within an hour, while the expectations are for a cut in the rate. I want to remind you the bottom line is not only what's going to happen today, but mainly what the Fed will hint as their own next steps. We all remember the quantitative easings. We all remember the expectations from the market for further cuts. So it will be very, very interesting to see how the Fed is going to deliver or disappoint the traders and the investors. So let's go over the report, see what of our opportunities go and develop and what of the other ones we can trade and expect. So let's start with commodities this today, because this one is soaring. This is the natural gas, and what we have on the natural gas since the main breakout. Just 1 second to draw here. Since the main breakout of the trend line, and then the second opportunity was the bullish hidden divergence, and another breakout of the resistance and the dynamic trend line. Basically what we got is a beautiful straight continuation to the upside. So two things to mention here. First of all, according to the long-term cycle where we all started from, the weekly triple cycle, this is the one that we trade, right? 1, 2, 3. According to the triple cycle we have, we are heading towards this zone. So everything remains bullish. The weekly is bullish. The daily is developing its second leg to the upside. So no reason to change the long term. However, on the short term, it's coming to this place where we start to face a slowdown, which will be a good place for partial management. Partial management means partial cash out or just trailing the stop loss according to the swings or according to any other trailing methods with moving average, with trend lines, channels, Fibonacci levels, everyone with his or her own methods of management here. As long as this trend line holds, basically our assumption that we are in bullish conditions, and we do expect pullbacks, if happen, to be temporary and potentially to provide further opportunities. So long story short, once this one becomes opposite to our direction, it's a great place to put some cash out. It's been a wonderful ride. No reason why not to enjoy from it. So this is for the natural gas. Gold, our bearish view from the bearish divergence on Monday also goes good. Now we're breaking, trying to break below the rising trend line, and this is making a structure. So this is the first leg. The expectations here are like this. Now, what do we have? If this is the first leg from the 4-hour chart in expected continuation, then the 1-hour chart would have to be a structure, and it is. And we can see here the higher highs, lower highs, lower lows, and now the two waves building up. So basically, break below the rising trend line should, if there will be no surprises from the Fed size or whatever, should continue lower. Our warning sign would be, if this is our one leg, if we suddenly cross above 61.8, it would be a warning sign. And then we'll have to stop for a second and see how the market would want to continue. So that's the two things we have from the commodities. And another one, sugar, also got activated a couple of days ago. Since then, rally a bit, drop a bit to retest the broken trend line. Now we'll start to rally again. Anyway, our trading here is bullish due to the bullish structure we have. 3 higher highs, 3 higher lows, double wave correction and breakout, followed by a bullish divergence on the histogram. All that fits in the expected direction according to the daily breakout and the weekly cycle, which we fit here. Can be this way, can be of course this way, doesn't really matter. So we got the first move, bullish convergence, correction, deep correction, sort of ranging, right? And we expect it for the continuation. So our view, retraces and buys, and that's what we are facing on since Monday. So that's our commodities. Now let's jump in the forex pairs and see which of them have to be updated. So I'll start with the updated ones, then the ones that we have to pay attention to, and new opportunities that are developing. The first one that has to be updated is the dollar CAD, which our view was sell the rallies. So basically, this is what we wanted to see, the rallies, and then look for the sells. However, the rally here, it's not a reversal pattern. So if we are in this trending conditions, we want to see corrective structure or a range. And what we got is a very, very massive candle as a direct reaction to the, let's say, disappointment from the Canadian raise decision. The way that the central bank here look at the reality is a slow down in the economical growth, economical factors, and so on and so on. So basically, negative view. This has its impact right away. The investors expect further rates cuts, and the reaction is accordingly. So this reaction basically, it doesn't change anything of the cycle as for now. However, it raises up the question of the main cycle. And since our main cycle was the weekly triple, and we expected the further continuation towards the 50%, which is still relevant. But here is the warning sign. Take a look what's potentially happening since the reaction. Now, how will that continue from here? We can't know. It's impossible to know. It will be a waste of time to try and to get. But the main thing in such development is the update that we have to do. While the view was sell the rallies, right now we have more warning signs than beneficial signs. We don't have the reasons for a sell as for now with such reaction. And that's why dollar CAD simply is moved with a neutral. Before we get involved in something we don't want to, it's simply better to remove it from the list and go neutral, waiting for the next opportunities. Will that be a long-term buy, or will that just be a temporary reaction and sell continuation? Time will judge. But one thing is clear, as for now, there are more warning signs than positive signs, and our action has to be accordingly. Next one, pound versus the Kiwi. Another beautiful run that we had. on this one. And as I always repeat, ride what the market gives, but ride the facts. If the facts change, adjust accordingly. And what happens here is we have two false breakout on the top, followed up with a bearish divergence on the histogram. It's a continuing divergence. And right now, one lower time frame basically also shows a possibility of something tricky to start. So the picture is not clear anymore, and that's why it's great to do a cash out here and step back and look how it will develop. Will that win this bottle break up and then simply continue? Then we'll of course jump in the buys again. Or will that simply go for extended leg of the correction and then the future rallies? There is no way to know that in advance. The only thing we can do as traders is follow the facts. And our facts were bullish at the beginning of the week due to all the weekly and the daily synchronization. That's why we got involved, right, with the break of the trend line. But right now, the market says no more synchronization and shows the warning sign. Should we fight it or should we accept it? You know my view, I always choose to accept it. So the pound kiwi currently goes to neutral. It is a cash out. Two false breakouts and divergence against the direction of the trade. It's a warning sign which has to be respected. As simple as that. Okay, so pound kiwi is another one that has to be updated on our list. By the way, what is the list I'm talking about? Of course, you have this report available from Monday. Okay, such report will be delivered today, of course, after the live room, and that's where the updates come from. All right, so let's move on. Where was the next one? Dollar yen. Another one that we have been riding our buys with the retrace, and we got here a beautiful trendline breakout and a rally. So what's next with this pair? While the weekly cycle still has the room, look what happens right now. Daily ticks a divergence in two scales. 4 hour ticks a divergence. So do we have reversal signs like false breakouts, two false breakouts, or false breaks and convergence, or lower highs, lower lows? No, we don't. So can we sell? No, we can't. But what do we do in such cases? Cash out. As simple as that. Two time frames are in disagreement. It's a great place. Take the money, thank the market, and let it decide how next moves would look like. So for all those who are involved in dollar yen, it is a good place to say thank you, Mr. Market. Two time frames out of the three that we have been working with are now not supporting the buys, and the action here is super clear and easy. Get out. We want to stay in and we want to ride the trends as long as they deliver, as long as the market provides, like the natural gas, for example, right? We want to ride it as it goes. All right, so that's the update of the cash outs. I want to repeat, we have dollar CAD removed from the list because of the strong, let's say, unplanned reaction, and that's definitely showing more signs against than the positive signs in the direction we wanted to find setups on. So it's removed. Dollar yen cashed out, pound kiwi cashing out, and same with the natural gas. Of course, natural gas still has the room on the higher time frame, therefore it's only partials. Perfect. So now let's see the other developments. How do we work with them, and how will they deliver to us? So let's start from the scratch. Aussie franc was the first one. We are riding the second leg here. Epic pen. This is the second leg we are riding. What do we need to pay attention to as well? It's not yet ticking, so I don't know if this day will end bearish or not. That's why I prepared the possibility for that. This potential of a double top with a bearish divergence if the daily ticks down, and the 4-hour has a divergence by itself. Here it's even stronger, right? So 4-hour already ticked down. If the daily will tick down, that would be again 2 time frame out of the 3 that then we have been bullish is to be against. It will be time to go what? To go neutral and remove from the list. So you follow that, guys. This is the first update to make. If after the Federal Reserve, the pair will change its direction and will take the divergence. Keep an eye on that. Next one, Aussie Kiwi. After the breakout of the trend line, the view is bullish. Now it's official bullish with the higher highs, higher low structure, trending structure. Our expectations are, of course, for continuation. Basically, we are back to the main cycle here and the main divergence. Weekly is bullish. No opposite divergences. Last divergence is only bullish. Daily last divergence is bullish, and the breakout 4-hour creates the structure. Buy retraces is the plan. Could that be retraces here? Of course. We already had one and another one, little one, but the idea is retraces and buys. Australian versus the dollar. Continue with its bullish view. Well, to be honest, I was personally under the impression that we can get this, but as I always say, it doesn't matter what I draw. The market will decide to do what it wants to do. Our view is bullish according to the main cycle. This is our view. Just want to remind you. Bullish divergence and pressure from the daily, which we expected 2 ways to the upside. And the weekly, our cycle that we trade, right here. Of course, we can break it into triple as well with bullish divergence and also bullish pressure. So our view was looking for the buys. I personally was expecting to see possible 2 waves and then a breakout. The market decided differently. The market decided to react immediately after this bullish hidden divergence. And in that case, we always are looking for new bullish signs. And we got it right here. Bullish structure in play. The pair is expected to continue higher. How much higher? Well, according to the weekly cycle, there is big room. But even if we just continue the rally, then we are open to go as long as that would complete a divergence. It's not the case yet. Therefore, bullish view remains on. Euro versus the Australian, this one delivers and works very beautifully. Bullish after this breakout. Then on the lower time frame, with the break of the trend line, we got this to be a structure, trending structure, to verify the direction we expect. We got the corrections, we got the breakout, we got the continuation. So the Euro Aussie works pretty much good. What's next? Daily and weekly cycles are lined up yet to the downside. And as we discussed on Monday, as long as we are holding the falling trend line structure, we are bullish. Is it good to make partial cash outs? 100% yes. Divergence on the 4-hour chart and divergence on the 1-hour chart, the one that we got the last setup from, right? This one. And that's where we get the continuation. So it's a very good place for partials, and now let the market talk and decide. At that moment, we can draw as much as we want. The market would not care. So we want facts. So we are waiting to see the market reactions after the Fed, and we'll decide accordingly. Euro versus the pound, sell the rallies. So we are still stuck, unfortunately, in one candle, which starts to be a bit annoying. The latest news from Britain. In December, quick elections are set to go. All that despite the fact that the Eurozone already agreed on postponing the Brexit date by 3 months, by end of January. So nothing new with this pair. Sell the rallies is still the plan, but sadly we are stuck and impossible to find setup. One big candle price stuck here, two smaller candles price stuck here, so really impossible to find anything. We are looking for something clearer to be delivered by the market, and we want to see it breaking up here, making the divergence and the setup, or at least breaking below, holding, and then sell the rallies. Which of them would be activated? We don't know. We can't know. We are after bearish direction. Euro Kiwi. The bearish view remains on despite the ugly moves on the last couple of days. We are still under the triple cycle from the daily. First leg down. We could expect two waves or a range. Our view, though, remains bearish. Sell the rallies. We got the double cycle breakout, but it doesn't gain the momentum, and it's yet fighting back and forth, nothing really yet developing. So we would see how it continues. Likely after the Fed today, we should be exposed to some moves, and we will see if the market will agree on the direction we set. Euro dollar holding the bottoms and the magnet zone, the bank zone, sorry, holding the rising trend, rising trending conditions, holding the bullish divergence, and potentially going for the breakout. This breakout should be good because it will also be under bullish trending structure condition. Our expectations are further continuation. Keep in mind, if the Fed cuts the rate and hints for more, the direction should not change and the bullish pressure should remain on. So we will see how that goes after the Fed. Pound Kiwi we discussed before. It was one of the updated pairs. New Zealandian dollar also holding the bullish hidden divergence. So far so good. We are looking for the trendline breakout or lower time frame, higher highs, higher lows, like the Australian dollar. We don't have it yet. It's only one shot here, and that's all so far. So yes, it's a convergence, but that's all. The market yet refuses to gain the bullish structure momentum. So we should see how that goes and develops. Again, expectations are to see something after the Fed today. So once again, we want the break of the trend line for our bullish continuation, or 3 higher highs, higher lows to start the trend line on one lower time frame to start the trend direction, and then buy retraces. This is our plan here. Dollar CAD we discussed, dollar yen we discussed. So now for the new opportunities out of the forex view, Euro CAD is the first one. Actually, this one delivered yesterday, but we were not here yesterday for the discussion. So what do we have on this pair? Triple descending cycle on bullish divergence, triple descending cycle, bullish divergence, and a massive supportive area of 145, also psychological zone. Daily fits in perfectly on the last leg, triple cycle by itself. So we are in a good corrective mode. Buy retraces was the plan. We were buying 2 weeks ago until we got these 2 waves and a blockage, and then we said we are leaving it until the corrections are over, possibly for the bottom of the range, and this is pretty much what we got. Now I want you to pay attention to the beautiful reversal pattern structuring on the candles on a daily time frame. Great run of the 2 bearish candles with top spikes. Top spikes in a bearish trend represent cash outs. Inner candle for slowing down momentum, again with top spike, cash outs. False breakout pattern here with some sort of kicking position to the upside, closing above the last red candle, taking the bullish divergence, and now we got the confirmation with another rising candle. Great structure from the candles on a daily time frame. Watching on a 4-hour chart, we got the most recent trend line breaking. We got the bigger scale moves here, also breaking to the upside. It looks positive, looks correct, and the idea here is buy retraces. So the daily could continue within the range, and we don't know if that would be the case, or develop the 2 waves correction according to the weekly cycle. This or other way around, currently all the facts are back to bullish, so do we. So EuroCAD returns to our list. All right. Questions so far, guys, about any of the things covered, discussed? If yes, now is the time, so please ask. Oil. Questions about anything discussed so far, Vladislav? About the new one, I'll discuss. Oil, to be honest, yesterday I uploaded to the YouTube channel. It wasn't in the live room because there was no live room with me yesterday. Oil, I uploaded to the YouTube channel the short-term opportunity. This one, triple cycle. It was day trading opportunity, short-term, and the idea here was to get this correction, right? Inside the triple cycle from the 4-hour. So the 30 is reached, 50 still could be reached, and that's the final target. Besides that, I don't see any new cycle, to be honest, to work with. Definitely not from the higher scales. So I don't know to say the higher time frame. The shorter time frame is kind of close to be done, right? Or but nothing more than that I can see right now. So have to disappoint you, but don't see any further opportunity here. All right, so EuroCAD is new. Let me just check quickly if I didn't miss anything. Lesson discussed, and yep, that's pretty much it from the Forex. The question: 3 higher highs, 3 higher low. You mean this one? Oh yeah, it is bullish structure, of course, but it has to fit in the cycle. If this is a bullish structure, you expect a bullish direction, right? If you expect a bullish direction, then the higher time frame has to be bullish cycle. And I didn't see any. I don't see any. I don't find any that I can call a bullish cycle here. It's an well, kind of, yeah, kind of a mess. It's also bearish hidden divergence here, so I don't know. I was looking at that in a bigger picture, honestly, but I don't know how to read that. It's a range, but range of what? I have personally hard time to decide. I don't know. So yes, when you see higher highs, higher lows, of course it's a bullish structure. 3 higher highs, 3 higher lows. But if it is a bullish structure, that means you expect a bullish trend. If you expect a bullish trend, that means you have higher time frames supporting your assumption, right? Expectations. And that's not the case here. So for me, it's a no-go. Sorry. All right, guys. So what's next? Buyer from the stocks. We are running here. We cashed out partial on Monday with this divergence. The rest remained running. Why the rest remain running? Because weekly cycle is still bullish, daily cycle is still bullish. Daily doesn't have this divergence in play. The cycle is still going, so the expectations remain the same. And cryptos. We have the Ethereum versus the Bitcoin plan on this. It's one of the list. So we want a breakout for the buys. And Ethereum versus the dollar, we want our retraces and buys. So it might be as a ranging structure. It might be some bullish hidden divergence potentially. We will see. Our view is bullish there. Questions? Keep in mind 25 minutes, guys, and we will see what is coming out of the Fed and the cash decisions. And once again, pay attention mostly to the pairs that have to be updated. Dollar yen, pound kiwi for the cash outs, natural gas for partial, and dollar CAD for removal from the list due to the too strong reaction, especially within one candle when the expectations were for corrective cycle. So has to be simply updated and removed. Alternatively, the EuroCAD comes in the following. Our next pairs on the follow up that have the main attention is first of all the EuroCAD, but also the New Zealand dollar, the Euro dollar, the Euro pound. If we get a clearer setup, which one else do we have here in the main structure? Aussie dollar and the Aussie Kiwi, and the gold. Pay attention to what's happening with that. As discussed before, gold has to break this double structure to the downside to gain the next momentum. And alternatively, if it does not do that and we simply cross straight to the 61.8, it's a warning sign, which will have to be respected and, of course, removed if that happens. All right. So this is pretty much it for today. Thank you very much for watching, for being here, guys. I wish you a fantastic trading day. Let's see what the Fed will have for us. I'll see in the Telegram groups, of course, and enjoy your evening. Bye for now.